Morning, ladies and gentlemen. This is a New York opening Forex commentary for FXStreet, brought to you by FXDD. My name again is Greg Michalowski. I'm the currency analyst for FXDD. I'll take a look at the markets from a technical perspective. Also speak a little bit about the fundamentals overnight in the eurozone. Of course, the solving of the problems continue on. It's a very fluid situation. Lots of comments coming from Trichet, Merkel, so on and so forth. They're starting to sound the same, get kind of annoying for traders, I know, but nevertheless, what we're seeing here from a technical basis is the euro moving higher. We also did have better employment statistics come out of Germany as well here today, which is also giving the market a little bit of a support. The unemployment change was a minus 68. This was much better than expectations. Also, the unemployment rate fell to 7.8 from 8%. So that is also giving the euro a bid here this morning. But from a technical perspective, which is what we base a lot of our decisions on, we take a look at this 100-hour moving average line. That's a blue line in this chart. And you can see it's starting to flatten out here after being in this downtrend here for most of the week. This is Thursday, so this is Monday's high. This is Tuesday's high to the low. 50% retracing comes in at 132.64. The 100-hour moving average blue line, it comes in at 132.81. The high for the day came in at 132.78. So we did see some sellers against the 100-hour moving average here, and with the market trading at 132.62, we're just below the 50% retracement line of the week's high to low range. And uh, this level is also of importance because if you go back to this day right here, the lows came in at 132.69 for two successive hours here. We moved down, closed up here, then moved down again and moved higher from that point. So that's a level that the market remembers. You can see how it remembered it here when the market fell below here, came back, tested the 64 level, and then starts to move down. When the market came back, it tested the 66 or 60 or 60 two level here, and then moved back down. And the market for the third time here came up, tested, went through that level, but ran into the 100-hour moving average. And so really between this 69 level and the 100-hour moving average is good resistance for the euro versus US dollar, and that's the level we'll be watching here today on the top side. If the market is able to get through this level, we should see further momentum to the upside, with the possibility that the market even actually moves up toward this 200-hour moving average in the long run. That comes in at 133.45. So that would be a target level on the top side. If this bias can continue to the upside, we may also have resistance here at the 133 level, 61.8% retracing the move from the high to the low. That's if we break this level. Not until that point. We're going to expect to see profit-taking buyers against the level, as the market still is a little bit of skeptical about what may happen here, and also the longer-term implications of what may happen as far as the Greek situation. Remember, this is a bailout, folks. This isn't like good news. This is bad news, and money is being thrown at a bad situation as opposed to a good situation. So here on the downside, what we're going to be looking at, that we're looking at the 5-minute chart now, is support against the 100 bar moving average on the 5-minute chart. We held at this 200 bar. It's always our green line. This is the blue lines are a trigger point. The green lines are a confirmation point. You can see the market move below the 100 and the 200 here, but no momentum to the downside. It starts move to the upside, came down, tested the 200 at this point, failed again on the move to the downside, and from that point the market said, okay, if we can't go down, we have to go up, and that's what it exactly did here. So we're going to find support against this 100 bar moving average on the downside, which currently comes in around the 132.30 level. If the market's able to get through that level, then we should see further corrective moves to the downside, with perhaps a move back down toward this 131.96 level. You can see that this level was has been a level of support, at least at this point right here. We had used it as resistance here and support there as well. So that's going to be a key level for us on the downside. That would be a target level. But right now we're in between this point and we're in between the top points off the hourly chart. Let's move on. Take a look at the sterling versus the U.S. dollar. Despite the fact that we're going to most likely, or all the polls are saying that we're going to have a hung parliament next week. We do in the elections. We saw this nice rally in the upside here in the sterling versus U.S. dollars. It followed the euro along. Now we did come up to the 38.2% retracement of the week's low high to low range. That 38.2 comes in at 152.67. The market high went right up to that level and then it started to come back down. It still remains a key level. If we break through that 38.2% retracement, our next target on the upside would start to look toward the 50% retracement line. That 50% retracement line comes in at 153.11. We will probably have some interim resistance up at yesterday's highs, of course, around the 152.90 level, but 152.11 be the next target level, and also near that level and coming down to that level is a 100-hour moving average. So that's the upside if we get through this level at 52.67. This is the borderline, but if we see some profit takers come in and people who are a little bit worried about the situation that's going to happen next week, then we could see the market start to retrace back to the downside. Where could we go? 38.2% retracement of today's low to high range comes in at the 152.18 level. That will be our first target that we look for on the downside. So sellers against this area, buyers down here at 152.18. Additional support comes in at 152.03. You can see this 100 bar moving average is moving up toward that level, and the 50% retracement of this day's range comes in at that level, not to mention the close from yesterday as well around that level. Moving on to the euro dollar versus Swiss. The importance of this chart, I'm going to do the hourly chart. I'm going to move out a little bit, and you can see here, we'll start at this point right here, and then move our way from left to right here. We had support along this trend line, support here, support here. We broke through support here, but we bounced off of that, moved back above our line, found support here, and today we came right back down to that line. So a number of different points along this trend line. In addition, you see this blue line here. That's our 100-hour moving average. That's continuing to be following that trend line as well. So today, when the market went down, we came down, tested this trend line. Actually, done it twice now. 108.09 is where the current trend line comes in, and the last bar came down to a 108.12. So we are finding support, but currently trading at 108.17. It's right on that borderline, folks. Either we're going to hold that line, in which case we'll have additional support down to 107.98, or we're going to break it and we're going to break both these lines and start moving to the downside. Give up the ghost on the trend to the upside, and perhaps move toward our 200-hour moving average in the longer run, which currently comes in at around the 107. 45, 50 area, right in that area right here. That's the green line in this chart. So really key level right here. You can see that at this point right here, we did break through that line. We did see the momentum to the downside, but that quickly reversed. Will it happen again at this time, this area, and continue that move? Will it bounce off of support interim, or are we going to give up the ghost and come back down toward this area right here, toward this old high? We will see. But if the market is able to hold support here, what does that say? That says, okay, well, the trend to the upside continues here. So really at a key level, and if we do hold that support, this will be our resistance level on the top side toward yesterday's lows, and also this 100 bar moving average on the chart, this 108.37 level, which is the move of the last few days. That's all this area right here at the 108.37 to 41 level is going to be our upside resistance if this level holds. So right at a key level here for the dollar versus Swiss. Watch it closely. Finally, we'll take a look at the dollar Canada. The importance of this is a par 60 level. You can see the 100-hour moving average is a par 60 level. And if we go back in time here, we'll just watch this line right here at par 60. Right there, we break and we fall through it. We come up to it, break and move higher. We come up to it, test it, test it. Here we move above and below it. Here it becomes a level of resistance here. Break through it on the downside. Move lower. Find it as support here. Buyers against that, and we have to go all the way back to March 19th where we had that initial low. Par 60 is a key level for the dollar versus Canada. The market knows it, and today we broke below that level and moved lower. We went to a low of par 20, but down here at par 09 is another key level for this currency pair. And I want to do the same thing. Go back in time. Just watch this line here. You can see a high here. We broke through here. We used it as support here. Used it as resistance here. Moved up. Used it. Broke through here. Used it as support here. Used it as support here. Support here. Broke through. Failed. Moved back to the upside once it broke through back above. Used it as support here. Support. Par 09 is another key level for the dollar versus Canada. We moved down to par 20. Also, we have this trend line coming up in, and where's it come? Par 09. So right now, the dollar Canada is this range right here, and that's what we're going to be looking for. Break above, we move higher, break below, we move lower. Greg Mikulowski for FX Street.